C Limited is a stock that I've had rated as a buy for more than a year now, almost 2 years, and I've been very happy with the performance. The price is up from around $30 a share when I first recommended it. It's now trading at over $143 a share. Recently, I've had subscribers asking if C Limited stock is a buy at current valuations. So I'm going to revisit the stock, update my evaluation, look at the current prices, and determine if the stock is a buy, hold, or sell at the new higher valuation. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So you could see C Limited's price performance just in the last year. It's been performing excellently up to $143 a share. And of course, I've been happy about that. One of the reasons why C Limited stock is outperforming is because the company has reaccelerated revenue growth. See, for years, the company's revenue growth was decelerating from very high levels, and it fell closer to single digits in 2023 and early 2024 before reaccelerating now. And it's been several consecutive quarters where the company keeps generating revenue growth higher than the previous quarter. And that increase in the second derivative, right? The increase in the rate of increase, we've talked about how that's a very positive thing for stocks to experience, and investors like when companies do this and they reward companies for achieving this accomplishment. And that's one of the reasons why C Limited has experienced this booming stock price. Additionally, the company turned profitable and has maintained several consecutive quarters of operating margin above zero. Now, it's also increasing longer term, right? In early 2022, its operating margin was around negative 15%. But C Limited management team refocused its ambitions on profitable growth, and it's been working very well. So not only are they reaccelerating revenue growth, but they're doing so while expanding margins. So its margin is now 1.94%, up from negative 15% in 2022. Similarly, its cash flow from operations to sales ratio is experiencing the same phenomena I mentioned with the operating margin, but the cash flow from operations is much better at 16%, up from negative 15% in 2022. The big difference between cash flow from operations and operating margin are non-cash expenses, things like stock-based compensation and depreciation and amortization. These are expenses the company has to account for on the income statement, but they're non-cash expenses, so it's not cash leaving the company. So its cash flow from operations numbers look better than the operating profit margin numbers. The return on investor capital measures how good a business is at taking investor money and turning it into profits and services that generate sufficient profits. Now, at just 1%, this number in itself is not good. But when you look at the history of C Limited and you see how it's improved on this metric, how it's improved building out the infrastructure and is now benefiting from economies in scale, that's what has investors excited about this company's prospects on this metric 3 years from now, 5 years from now, 10 years from now. It's improved from negative 240% all the way up to 1%. And if this trend continues, it wouldn't surprise me if the company reaches double digits on this metric over the next 3 years. What's also important is to compare the company's return on investor capital with the weighted average cost of capital. For C Limited, that number is unfavorable right now. Its weighted average cost of capital is 12.3%, while the return on investor capital is just 1%. But again, I wouldn't be surprised if 3 years from now, 5 years from now, the company's ROIC exceeds the WACC, which is a critically important accomplishment to achieve for companies, especially growth stocks in early stage development. So now let's look at valuation, and measuring by the forward price to earnings ratio, the stock looks relatively fairly valued at a forward price to earnings of 29. C Limited, with its accelerating growth rate, rising operating margins, rising cash flow from operations. This seems like a fair price for this kind of business. Similarly, measuring it by the price to free cash flow, valuation of 34 is relatively fairly priced according to these metrics. Remember, this is a capital intensive business, right? The logistics, the fulfillment, the e-commerce, all of that is capital intensive. And so the valuations of these capital intensive businesses are not going to reach the levels that are usually reached with businesses that are software based primarily. They generate higher valuations. And it doesn't help that C Limited is a non-US based company, a Southeast Asian company. And so there's always that discount applied to non-domestic companies, especially in the middle of all this geopolitical tension, rising tariffs, a realliance, a reformulation of alliances. And so all of that is just making investors more cautious when approaching non US companies if you're a domestic investor from the United States. Now, when I did my discounted cash flow valuation model for C Limited, which I updated today, March 5th, 2025, I found its intrinsic value per share to be worth $51 and the current market price at $143. The cost of capital I applied was not too high at 12.3%, with a cost of debt of under 7% and a cost of equity at 13%, given the company's beta of 1.55. The company has a relatively decent balance sheet with $8 billion in cash and short term investments and $4.4 billion in debt. So just in the last month alone, C Limited stock price has soared from around $120 up to $143. And the stock price appreciation for C Limited has been fast, and it's increased by nearly 5x since I first recommended the stock as a buy. So I still like this company's long-term prospects, but I think the valuation is getting rich at this point, given the rapid increase in share price. So I'm updating my recommendation here for C Limited stock. I'm downgrading it a notch. I formerly had the stock rated as a buy, and I'm downgrading it slightly to a borderline buy here today on March 5th. Given the rapid increase in valuation, I'm not as bullish as I was just a month ago on C Limited stock, given the changes in the world economic growth outlook and the increase in valuation for C Limited stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.